Go.
Hello, Warriors. If you're confused about what's going on and what happened in April seems like a dream, and now we're blowing off to the upside, I brought in the perfect technician. Very high elite counts by Peter Goodburn. So, get your recording out, even though this will be recorded on, on our website. I'm just looking for where it is. I see Mike's Power Hour. So let me do this because I want everyone on Twitter to be able to see what Peter's talking about now because of what he was talking about prior. So here we go. All right. So, Peter, great to have you with us here today. Really
Thanks,
great.
Dale. Yeah, it's been a long time actually since we talked together, so it's really good to meet up with you today. And yeah, I'm
Okay.
excited to see what we can show and yeah, try and give a little bit of clarity to what's going on with the markets today.
Yeah, I just want to clarify to people that Peter was accurate at the highs at 6,100, was correct about the magnitude of the decline, looking for 20% in S&Ps. And now, Peter, I guess the million-dollar question is, was 4,800 the low? And I'm guessing with the action that we saw yesterday, you could probably take a retest of that low off the table with your work now.
Yeah, there was a very small probability outcome of about 10% that we might start to sort of suddenly get another shock and trade lower. But we've yeah, with the news at the weekend, a little bit of a positive sort of news feed coming back from sort of Geneva with the US and Chinese delegates with tariffs. I think that's now sort of broken levels which we can safely say won't return back to those April lows. So they were, then when we saw the sell-off in late March and down into the April lows, I mean, we can say for sure that that was de facto the correction was over.
Okay.
And
It was sure
and
hard to buy it down there then, wasn't it?
yeah, because I mean, even with our forecasts, and I'm going to show you an extract from our latest monthly navigator report, um, which, by the way, I can show you where to, if anybody's interested afterwards in getting the report to subscribe to it. I'll show you where you can do that. But this is an extract of it, and this is the original sort of forecast for the S&P. Fact is that we arrived at this conclusion that there would be a 20% decline from around December's highs, because when we go back to the entire upswing into the July high, that's at 57.20, 21 here. This initial decline was three waves, which kicked off the correction of the preceding advance from October 22. We got down to 51.20, but we hadn't quite traded down back to fourth preceding degree, which is here. It's a bit lower. Um, but
That
there
was a
were three
yen. That was a
waves.
yen unwind trade there that took it from 57 to 51.
Yeah, yeah,
The,
that's right. That's
the
right.
carry trade
Absolutely.
unwind in August, and then we just marched into the end of the year.
Yeah, because we had the yeah, that's right. Dollar yen was topping out in July
Yeah.
and then suddenly dropped down hard. So that pulled us down, but it was only three waves, but it wasn't deep enough to correct the entire advance from the October 22 low. Now, when things like that happen from an Elliott wave perspective, we tend to check if that three wave zigzag pattern, if it's short to targets and proportionally short in terms of time, then we check two things. First, if that zigzag could be a part of a double pattern, so it then therefore digs a lot deeper. We get a next wave recovery and then it digs deeper. Or more often than not, we get an expanding flat pattern where the B wave trades into new highs and then collapses in five waves and returns back to wave four preceding. So we have this type of phenomena. Now, at the time in July, when the July decline occurred, we could see various different Mag 7 stocks like Microsoft drop in five waves, not three. So you had some indices and some Mag 7s dropping in in 3-wave patterns into the August lows, and some others were dropping in 5. Well, for those of you who are a bit familiar with Elliott wave, if you drop in 5 waves from a top like that, invariably that's telling you that that's part of an ongoing zigzag correction because the subdivisions are 5, 3, 5. So we knew that Microsoft and one or two others would develop higher as a correction in wave B as a 3-wave pattern, but it wouldn't break above the July highs. But the outperformers, if they were
Carried it.
part of expanding flat patterns, they would break the highs. And we saw exactly this type of phenomenon between Microsoft, as a good example. One or two others were like that too, and the S&P and the Nasdaq, which broke the highs. So we were tracking this type of divergence, bearish divergence, if you like. So we had a pretty good idea that once we got to December's highs, these measurements pretty much finished it on Q, and then we would get a 5-wave decline, which would actually break below the August low. We actually took in a rather conservative 49.07. That was a 50% retracement. And if you take a look at it here, 49.07, we got to 48.71 as the low. I think 48.32 intraday. This is the orthodox low, and then suddenly we've completely reversed. I mean, this
Okay.
is
Yeah.
and this is a very good example of an expanding flat pattern. And of course, Microsoft simultaneously actually bottomed into a zigzag pattern as well. So when you get that type of phenomena occurred, you have a high confidence, you have a high conviction that the market's turning around and heading higher. There was just a couple of idiosyncratic sort of questions whether 5 waves in the final conclusion sequence could have finished. But we've traded above the resistance levels now, and there's no way in which the market can basically turn down and break below that. I was fairly interested just the other day, just seeing this graphic, which I've pasted into Paint. I'm sorry it's not very big, but it was from Goldman Sachs, and they said, they made a note
Bears.
saying, the AAII, this American Association for Individual Investors, there have been 11 consecutive weeks being very bearish, and that's off the chart. I mean, obviously, it's a contrarian signal to go the opposite way. In other words, the market's bullish. And I know a lot of our institutional clients on our books, they've been far too bearish. They haven't leveraged into that decline yet,
No,
and
they say
they're still waiting.
it's mainly been retail and short covering. So what they usually call the dumb money has been getting bought that dip. And what's supposed to be smart money is still on the sidelines. So is that the fuel? Because I know your case is for 7K plus for a 5 going down the road. Because I was trying to think of what would be the catalyst. I thought it was going to have to be the Fed. But could it be sideline money that got out and now they're watching the market go without them, and it creates this chase of FOMO that they have to get in because the market doesn't give them breaks to do it?
Yeah, I think it's fear of missing out, sort of a scenario, and that fear of missing out, I think, will drive things forward. So yeah, I think the institutional money, and there's a lot stacked up, still has a lot of pressure to put into the market, and this can drive it up quite significantly. So you're right, the small guy got it right, and the big guys didn't, and they're trailing behind a bit. So perhaps the idea that China US can come to some solution over tariffs. I don't think the CPI was a big factor today. I mean, we know what CPI is doing, even though it did push the S&P up after the data came out earlier today. But I think the main driver here is the fact that the world is starting to change over tariffs. I mean, the European Union, there's no way that they're already petitioning to the World Trade Organization to complain that the tariffs that the US have imposed is unfair. So if they're going down that route, they're basically going into a more antagonistic route. So there's
And
no
who's
way that
that?
Europe,
Who's doing that, Peter? What country?
the European
Oh,
Union,
yeah. So it's going to
yeah,
be nasty between US and Europe,
yeah. I mean, rather than
like
biting the
China.
bullet, Yeah,
Yeah.
rather than bite. I think Europe. I mean, even Treasury Secretary Besant said, oh, "Well, look, the European Union have got so many quango sort of departments and countries, and he said it's going to take them a lot longer to come to the table, which it will. I mean, but they're going about it all the wrong way. I mean, obviously, yeah, I've been involved in some of these big organisations in Europe, even some of the big banks, and there's no single person these days that sort of takes a unilateral decision over something important and then makes the decision and everybody agrees and then falls in line. Nowadays it's all voting consensus in boardrooms, and we don't want to upset anybody. So the European continental European mindset is very different. It's like a very socialist sort of approach to making sure that we please everybody and we don't upset anyone. And this can get in the way. So I think Besant was right when he said that today. I think it's going to take a lot longer for the European Union. That said, winding the clock back a little bit before the sell-off that we had into April, the European markets were doing a lot better
Yeah.
than the US because they thought that the big houses, the big asset managers thought that the P ratios were cheaper. Um,
Let me
and
ask you something about that because, I was trying to figure out how your two forecasts of being bearish the dollar
Oh
and
yeah.
being bearish equities was going to happen because the old paradigm was weak dollar risk on. And
Yeah.
during this decline, it was decline, weak dollar, repatriation, moving away from the dollar, as well as the other markets outperforming. That was happening before the dollar, a big sell-off in the dollar. So is a weak dollar meaning risk on, dead, and that we need the dollar to be okay for U.S. assets to come back into the four? Or is that the new paradigm that the market? It seems like this rally since early April has happened with a stable to slightly stronger dollar so that there hasn't been capital outflows.
Yeah.
So I'm a big currency guy. Can we have a bull market in stocks uh, with a bear market in the dollar with what we recently saw?
Well, the unfound well the consensus idea from the big asset managers and the hedge funds that we talk to with these comparing these two asset classes is that if stock markets were going down, the dollar should go up. I mean, this is their mindset, and it still is. And um,
But it
and
didn't. But it didn't during
that's
April.
right. Their mindset is, though, that the dollar is basically there. The only way that the dollar will
Safe
trend up
haven.
is if yields are trending up, 10-year
Yeah,
Treasury yields, or if there's some sort of sell-off in the stock market, the dollar should go up. Well, that didn't happen, and we said
exactly.
before, even back in January when we first recognized the dollar was about to collapse lower, that we said, look, the dollar's going down and the stock market's going down. How could they? We were getting a
Yeah.
lot of confusion and
Recency bias, right? I mean, because it's been that
yeah.
way for a while.
Well, of course it is. This is the mindset, and this is why it's so difficult to shake off. But I said, look, we've got we've got very good clear patterns that the dollar's going to be declining and the stock market's going to be declining as well. Why could that be? We were getting asked, what fundamental reason could that be? And it wasn't necessarily apparent, during that time until
Right.
we got to a point where we recognized that there was loss of confidence in the dollar. You've seen to some extent some very, very big dollar selling in Asian currencies, the
Right.
South Korean won and stuff like that. Taiwan dollar,
That was
Taiwan
amazing.
dollar in particular has been a
Yeah.
really big drop.
Yeah.
But there is a bit of a psychology shift going on at the moment with the way that the dollar is really put into the framework of the other asset classes. I tend to think that the dollar is going to be in a much, much broader downtrend for the foreseeable future, but that's longer term out. And the proof of what we're of that is really in the way in which the dollar's declined since January. It's developing down into an Elliott five-wave pattern, which denotes trend is directionally downwards. It's not quite finished, I don't think. I think we've got one more sell-off. But I think then, if the stock market's now got over this idea that the two asset classes are now going to work their way back into historical precedent, then the big move up that we're forecasting for the S&P. So here's the weekly chart on the S&P. Here's the bigger picture. So it'll take probably 9
couple
months.
of years.
No, 9 months to get up here. I think
9 months.
9 to 12 months. Somewhere next year up to 75, 67. What's that as a percentage from where we are today?
Yeah, 30, 40%, 50%.
Where are we? 58, 80. That's no, it's 28, 30%.
Yeah.
But you've got, so that's, let's say 30%. But I think that whilst that's going off, there's no reason to think the dollar would go up at all, really, during that phase. So the bigger picture of the dollar is very much to the downside. Something like this.
Okay. Can you hold?
Yeah.
Oh, go ahead, finish, and then I have a question on this chart.
Yeah, and I just want to make sure that everybody listening in or watching in doesn't get confused with the time frames we're dealing with here, because we're talking about two different things. This five-wave decline from January hasn't quite finished. I think that we should get one more sell-off, and then we're going to get a multi-month corrective rally. So I just want to make sure everybody's aware of that, because this five-wave decline, once we have confirmed its completion, the dollar will have to go through a corrective rally to the upside, and that could take us back up to 103, 104, something like that. So just to clarify that, but otherwise, I think the normal association with these two asset classes will probably trick back again, but that also means treasury yields will be declining over the next year.
Okay, and I've never seen a market move sideways for longer than the TLT, and with people waiting for the spawn bottom. But I wanted to ask you a question about that prior dollar chart.
Okay.
The longer term one.
Yeah, this one.
Yeah. Because I've seen a count, and I'm sure I want to hear how you discredit it, that high at 1478 to the break at par 82 was an A, and then the rally up to 1017 was a B, and then the break that you have finishing 1 would be C to complete 4, and the dollar's going to go to 120.
Okay. Yeah. I think the only way to see that would be to compare with lots of different of the other G10 currency pairs. Let's have a look at dollar yen, for example, to see if the dollar yen has the potential to trade above this equivalent high at 114.78. Okay. So let's have a look at dollar yen, because that's a good example. Let me have a look at it here.
Yeah, it's never going back up there.
Yeah, I mean, I'm just gonna, sorry, it's just a second. Okay, here we go. So I've got a monthly. Well, let's go to the weekly chart. No, let's go to the monthly chart. This is the monthly chart. Now, the main pattern here is really going up from October 11, and this sequence up is basically a zigzag. We've got 5 waves in wave A to 125.86, B down to 99.01, and then 5 waves up here. And it measures as a zigzag. So we want to proof that that's a zigzag. We don't want to just basically put some fancy labeling on. We want to proof that. So 100% equality, we're looking for around 100% equality. Do we get that? The answer is yes. Here's the measurement. So we can prove that dollar yen has actually completed a zigzag. Now, in the larger construct, we believe that this zigzag is actually part of an ending diagonal pattern, because zigzags are component waves of ending diagonals.
And it'll complete when I'm 102?
Yeah.
2050, huh?
You, like me, will probably have wings by the time this gets up here.
I have a wing now, man.
I'm talking about
Chicken
wings,
wing.
not horns.
I know. All right. So then,
So
that's how
I
you
think,
discredit that other count is because
yeah,
of
I
what the
think
yen could do.
if you take a look at other G10
How,
currencies, let's have
how
a look
about
at Aussie
euro?
dollar.
Euro's the biggest part of Dixie,
Yeah, but it
right?
looks too much like the dollar index, so you can't do a like for like
Okay. All
comparison
right.
because you need something that looks very different,
Okay.
but also gives you the same direction and
Uh,
amplitude. Okay,
okay.
so you could look at something like Aussie dollar. Okay,
Yeah.
that's good. So here's the
Yeah.
Aussie dollar. So
Wow.
we go back to 2001. You got this
Yeah.
huge
Yeah.
five-wave advance. Then we go
Yeah.
335. You got a big correction, and
Yeah.
now we've had this big spurt upwards from this low. That was
Right.
March 20. That's the pandemic low. We've had
Right.
5 waves up, and now we've confirmed 3 waves down. So this
Wow.
is on its way up like this. This is the third wave over the next several years. So this is going to see some very, very big. You're going to see very big dollar depreciation. You're not going to see sort of like the dollar index go to 120. At least
So
I don't think
forget
so.
forget the milkshake
I don't
theory.
think I don't think if I don't think it's going to go to 120.
Okay.
If you're going to go to 120, this has got to break down. This whole pattern, this expanding flat pattern's got to break down because 120 equivalent to this would mean that you're going to actually probably end up breaking even this low. So
Okay.
so it's a good idea to when you look at something in isolation like this. This is a good lesson for everybody tuning in. You know, if you're looking at one specific asset class or whatever, try and do as much correlation work as you can. You don't have to trade those other things, but it will validate your own analysis and research. You know, it's very, very important to do that cross-examination process. When you get to this point where you're looking at sort of dollar measurements and currencies, it's a good idea to take something that doesn't match up with the benchmark that you're trading, but you still arrive at the same result through a different pattern. So this is a way that you
That's a
can create
pearl.
credibility into the analysis. Otherwise, if you take things which are too like for like, you're just going to validate your own perception, and it might be wrong. So the
Right.
idea is really to look at something very different
It's like
and then
being
see if you
bullish and only following bullish commentators.
exactly, and then you fall into the
Okay.
trap, don't you? So
Yeah, reinforce your own beliefs
yeah, I
instead of
mean,
looking at the other case, the bear
yeah,
and
you've
the
got
bull
to.
case.
Yeah, we want to we want to challenge ourselves really, test your own opinion, challenge it, see if it matches up. Look at look at the same asset groups, but different contracts, and see if you can validate it. Don't have to trade those things. The more you look at, the more you'll discover, and it's a real discovery process, but it's worth the effort, really, honestly. And then you'll sleep at nights.
Did gold surprise you on the upside, Peter, on this wave?
Only the last $100, really. I thought that we'd actually let's have a look at gold. Um,
Because you're looking for a correction now that's already begun. And a lot of people are saying, yeah, but it looks like only 3 down in ABC, and some people are saying, this correction's going to end above 3,000 and we'll go to 37.
hmm. Well, at the moment there is only 3 down,
Yeah, yeah,
sort of. But I don't think that every pattern, every 5 wave pattern that emerges is always looking at 3 waves down at one point in its process, isn't it? Um, that's no guideline to
okay,
determine if there's 3 or 5. Um, what I thought that the market would have topped out. I had 2 or 3 targets. There was a convergence here at 31.43 and 25, and we had
yeah, it broke,
31.90. I think we had 31.98 as well on the intraday.
right.
Looking at this tiny 5 wave pattern in here, I think it was 31, and I got to 31.67, and then it dropped $200, and I thought, oh,
With
okay.
the crash, it is everything sold off with the last part of the crash.
Yeah, and I thought, oh, that's a good rejection. That's good. And then I looked the next day, and we were already up
Yeah,
above here. So I was a bit surprised to
me
see
too.
that last stretch.
Yeah,
But other than that, I think it's pretty much tuned in. So I think that the entire intermediate third wave that dates back here to October, when was that? September, October
yeah,
23 is
yeah.
finished. and that we're moving down in wave 4. Now, of course, if you'd followed the news flow with the stock market and gold, generally speaking, they were moving in opposite directions because it was all basically about tariffs. Tariff war would mean inflation, and that's why people were buying gold, particularly in China. Most of the big movements up, particularly in that last sequence up here, was Chinese buying. We had our friends in Shanghai telling us how much speculative buying there was. It was through the roof. And there was a lot of margin calls when, of course, the market dropped off recently as well. But notwithstanding that, there was a negative correlation between the stock market. Now, if the stock market, notwithstanding a short-term correction is coming, maybe in the next week or so, but otherwise from that, the stock market is generally trending up now. So we've established the April lows have finished, and there's a general trend up. And that means gold is going to be gradually unwound over time, over the next months, as intermediate wave 4. So if we want to gauge where intermediate wave 4's correction levels will come, we need to put in some fib price retracements of intermediate wave 3. So we measure from here.
Yeah.
And we just put some fib retracements in. That will do it. That's good enough as a preliminary idea of how far the correction can go.
You think 4 will take us into next year, Peter? Or
I think so. I think it could do. Yeah, I think it could.
All right.
A 38% adjustment, which I'm pointing to here, is 27.20. I put 27.21. I've rounded it up. 50% actually comes back to wave 4 proceeding. For those of you familiar with Elliott wave, the correction normally enters wave 4 preceding degree, and usually at the low end of that fourth wave, which is the 50% retracement area at around this 25.18 level. So we could go down that far. I think we'll get a general unwind during that period, and that will sort of the unwind is really coming about because the stock market's going up. Nobody's needing gold as a hedge anymore.
All right, if this is a wave 5, and I did want to touch on the gold silver ratio because that's turning with the market turning. Would you tell people to exchange 1 ounce of gold for 99 ounces of silver right now, Peter?
Absolutely.
I mean, just make the trade with unless your bullion dealer has 20% spreads. Isn't that a good trade? Huh?
Well, yeah, I mean, it's
you have one more
absolutely
high coming in here. All right. Boy,
yeah. I
Yeah.
think that we could because I'm thinking that we could do because we've got 1, 2, 3, 4, 5 up. I've been watching this pattern here in the under
me
my
too.
worksheets here. This
I
looks
thought,
like here it is here, and it
Yeah.
looked to me as if it was doing an expanding flat pattern. I don't know whether anybody's familiar with that tuning in, but 3 down, 3 up, and then a sharp 5 down is normally a correction. This should, have one more push. I think it should, but the only way that it would be negated if it drops below there, which is still a bit of a way. Yeah, if it goes that low, then you can forget any higher high. But for the time being, I'm just watching it myself to see if we did get a little bit of silver underperformance in the short term, while gold is correcting lower, whether this could trade up. But when you look at the bigger picture, it's a bit of a no-brainer to be buying silver over gold.
Yeah.
Now I understand, here in Europe, we have VAT on silver, which is near enough 20%. So if you go to a bullion shop and want to buy an ounce of silver, you've got to pay 20% on top. Plus, you get your name in a government registry that you own it.
Yeah.
And that to me is a bit of that's paying 20% over the top, plus the fact that your name goes into some registry. Why did the government need to track whether you own silver or not?
So they could come and get it.
Yeah, exactly. And I don't want them tapping on my door one day. So I haven't bought bullion.
So buy shares.
You can buy shares.
Except you can't barter with your shares.
No.
If you need to.
No. I think if it gets to that stage in our civilization, if we got in the West, if we got to a point where we have to hold silver coins to barter, you can forget it, can't you? I mean,
I mean, don't you want to give being Mad Max a shot for a month or two? I don't think I do do real well.
No, I wouldn't do well. I tell you, my jiu-jitsu is a bit I need to practice a bit more.
Yeah, my camping is normally a nice hotel room. So anyway, Peter, I can't think of anything else I want to cover with you. Um, Anything else like are you following any other commodity markets? A lot of people talking uranium.
Mhm.
That even the administration is starting to, instead of they're going to change their expression from drill baby drill to glow baby glow.
And you said
What
to
do you
me
think?
and you said to me on the chat earlier about Slow Joe, right?
Yeah,
Um, well, I think oil at the moment is we determined that there was a really nice low in April at $55,
yeah,
and we saw a double bottom really at 55.30. So
yeah,
it's heading up at the moment.
yeah,
I think it's heading up as a correction. I was contemplating the fact that when we got to $55, that could have been the low, which would have ended the entire correction down from 130.50. But I've subsequently sort of thought that this correction could have another leg to the downside later, but not before we have a nice jump to the upside in a correction. And the
okay,
reason for that is because if you take a look at XLE, which I know for many people, which is a
yeah.
bit of a jump from the commodity to an equity-based,
That's an ETF.
it's an
We know
ETF.
about them. We trade
Yeah,
stocks here too.
but if you take a look at the daily chart, this one is going to have a jump up to 91, 92. But
It's a nice
I think
move.
there's, I think there's a, yeah, it is a nice move. But I think there's going to be one more decline to finish this pattern down as a diagonal. That will complete a running flat pattern. Here's the how that would look, and then we get the next bull market. So I'm thinking that there's going to be, I'm thinking 36.28. I'm thinking there's going to be one big push up here and then a drop, and then that's it. And I think by the time that finishes that pattern, I think the crude oil price will probably have one more look at a lower low, and that will
Yeah,
be it then. And then you can basically buy oil below $50 and take it up to 200, which
yeah.
is the bigger picture.
Okay.
This is the last phase of the inflation pop.
Really some great looks. I know people that watch this are going to want to know how to get a hold of you, stay in touch with your work in these wild times. I mean, it really has been one of the wildest Aprils I've seen in my career. Uh,
Yeah.
I think that people who were able to, well, maybe they could do it again with your account, just go and buy a spider and then go on the golf course for 3 years. Um, and not
uh,
have to worry about it.
Golf
It
courses
looks
are
like
for old men like us.
I thought we were going to have to be more tactical, but I look at your counts and there probably is a buy and go away type of trade setting
Well,
up.
I think if you're not too leveraged, you can buy and go away. And whether it's a golf course or a surfboard, you can
Yeah,
choose which activity you'd like to do. Now, if anybody's tuning in would like some updates, a lot of the material that we've looked at today, you can obtain. We've got a couple of really great subscriptions. One of which is the Elliott Wave Compass. We produce 2 reports a week, Wednesdays and Fridays. It's $39 a month, and you get basically 2 reports a week. So what's that? About 8 reports a month,
I
and it
get
really
it.
gives.
I read it.
Yeah, thanks, Dale. And really, it's really great. If you have any questions once you've logged in, let us know. We have a great team in the background who are supporting everybody. If you do go into the Elliott Wave Compass, you'll go into this interface, so you can then basically. I've logged myself off, but you can basically go through the all of the charts there. There's usually about 22 charts per report. And if you're really interested in the Elliott Wave Navigator, you can go and upscale into this. You'll get access to the Elliott Wave Forecast database, and that will tell you all about the US indices, but also you'll get the latest download report, which, of course, for this last month is all about talking about the tech stocks that we looked at before. This is the FANGs Plus, and you can see all the Mag 7s there and the
Does
analysis of the
Apple,
ultimate.
you reminded me.
Mm.
So I know you thought maybe a month ago that NVIDIA wasn't complete, that it needed one more low. Is Apple in that category too? Because its reaction has been weak.
No. I think that Apple has finished. I mean, this is the original forecast
Okay.
from December
Yeah,
last year that we
it
would
got
have.
to your target.
Yeah, we had 174 as a target, and I
Okay.
think if I run the next page,
Or shouldn't there be other stocks
it got to 169.
besides the darlings that led us, Peter, that this should be a very speculative wave, and we should be looking for things that did not participate in, say, wave 3 to the upside, that now we're going to get, maybe even micro caps could go. They've been trashed, where there'll be opportunities where money could move smaller cap stocks that have been beaten up rather than trying to be with the Mag 7 stocks.
Well, that's right. I mean, if you can, I mean, the safest thing with Mag 7 is you got the big institutions on your side, so they're not
Yeah,
going to
that's
allow.
true.
With the smaller stuff, I'm not sure if I can think of anything. Well, have you got anything in mind about that? Any names when you talk about the smaller companies? I mean,
Like
a couple of
junior miners,
Oh,
and things
well, I
like
think,
that.
yeah, okay. Well, that's moving away from the Mag 7 type
Right.
stuff.
Oh, yeah.
But yeah, well, I think that the last look I had on some of the mining stocks looked pretty good. Vale looks good.
Yeah.
Rio Tinto, zinc, Rio Tinto looks good.
Coeur
Um,
d'Alene exploded last week.
right.
CDE. Uh,
Yes. And
uh,
some of these beginning to look quite cheap because they've come off a lot. And we've got clients in Brazil who are buying a lot of Brazilian stocks, some of the state-owned
so
companies
they
like
get the
SID.
double bang. So wouldn't it make sense then, with your outlook on Aussie, to buy either Aussie or Canadian miners to get both the appreciation of the metal and to be in a
And the
currency
currency.
that's going up against the dollar?
Yeah, well, that's right. I mean, we've got a buy signal on things like Fortescue, which is the big. Let me just find the iron ore. I think it's on this one. Fortescue.
See, we have to meet more often so I don't keep you longer than you planned for. But
No, it's okay. Well, I think
okay.
we're okay. This is Fortescue, and this is a really great buy signal at the moment. I mean, we've come from 29.95 down to 13, so I mean, we're
Yeah.
pretty much halved.
And that's just a
And
retracement.
I think that we're gonna push up quite a bit. We're
Okay.
gonna go up to the 70s.
Wow.
So
Okay.
the
Where is
Fortescue,
that? What country is that from?
that's traded on the ASX in Australia.
Okay.
And some of the Brazilian stocks like SID, I haven't got any updates specifically, but SID I know is one of the big ones, which is the state-owned steel company. I mean, they've gone down really to very, very low numbers, and it's a bit of a no-brainer. It's almost like buying an option without an expiry. If you're buying in single digits, a state-owned company like that, and you're
Yeah.
also getting also going to get favored from looking at the Brazilian reais, because our analysis suggests that the reais is undervalued and it's going to start appreciating against the dollar. So you get a double whammy as you're
The
describing.
the real. And what was that the first one again that you showed me?
SID,
Sid was
SID,
the first one,
SID
or the
is
one
the
prior?
Brazilian stock.
Okay.
Is that the one? Yeah, I mentioned, yeah. And uranium, I'm not bullish for uranium at this point in time. I
Okay.
think that there's still some downside to come. I'm updating actually uranium at the moment. I had a look
Okay.
at it yesterday, and I think there's still more downside. But yeah, most of our commodity report actually, we're going to be publishing our mid-year reports starting next month. And at the moment, we've got, yeah, this is the Elliott Wave Commodities Report, so you can also add to that. And we've got a lot of stuff in there which also covers uranium. as well. So
Okay,
yeah,
Peter.
there's lots of coverage that we're looking at, but
So
you'll
much
get up
going
to
on.
date with them all.
I
Yeah.
want to thank you for being generous with sharing your views and going 50 minutes or so and breaking out charts. It's almost like a consultation you did for me and our community. Really appreciate you, bro.
Thanks, Dale. No, it's always great. Love to talk to you, and I hope everybody watching really has enjoyed it as much as me.
All right. Well, thank you. My trading warrior brother, Peter Goodburn. Follow him on X at Elliott_WTI and go to that website. Keep in touch with elite wave counts from Peter Goodburn. That's a wrap, everyone. It'll be on video. You'll want to watch it about 100 times. That's my prediction. Peter, blessings, bro.
Thanks, Dale. Appreciate
All
it.
right. That's a wrap. I'll see everyone tomorrow. Good hunting. See you in the room. Remember, don't just count your pips, count your blessings. Adios. See you, bro.
Thanks, Dale.